Let's go. Let's go. Let's get it set up. Let's get it set up. And welcome to another wonderful Winning Wednesday. I hope you are having the most enjoyable of enjoyable Wednesdays. I got to set us up on Facebook as well so that we are flowing. All right. This week, I wanted to have a conversation with you about something that I am not hearing a lot of people in this space educating others on. So, there we go. Let's go. Let's go. All right. Let's have a conversation this week about something that I do not see many people in this space having a conversation about often. And the thing is something called bank ratings. If you're with me and you have an understanding of what a bank rating is, please drop it into the comments because until I started working in this space and I got to fully understand, well, what is business credit? I was under the impression that business credit was really just a conversation about paying my bills, right? As I did on the personal side of the ledger. I wasn't really thinking about there are other ways that this can happen that I am not familiar with. So, as I was going through and doing more research so that I could be a better coach to you all as you are working your way through your credit building journey, I came across something called bank ratings. And guess what? I figured that this would be a great topic for me to share with you all. Right. And as we know, as we are building our business, the first thing that we always have a conversation about for one of the things that we have to do, the first thing that we have to do is we have to create our entity. And if you are in the state of Virginia, like I'm in, you know that that means that you have to go to the State Corporation Commission and create your entity, whether that's going to be a corporation, a limited liability company, etc. That's something that you have to do, right? Step number two is go and get that social security number, right? You go and get that social security number, well, sorry, the EIN number, TIN number, so that you have a taxpayer ID. The third thing that you do is you go and create a business bank account using the information from the State Corporation Commission. Usually you need an article of organization as well as that EIN number that you've gotten from the IRS. And what I have found is that for many, this is where they stop. And guess what? I have had conversations with people who are pulling in millions of dollars in revenue, millions of dollars in revenue. They got lucky. They were able to self fund, right? And I made a joke the other day when I was at BNI and I did my keynote. I said, where them fans at? Because people are bootstrapping their businesses using their personal resources, and that needs to stop. Just like you raise your child and one day you send your child off to school, right? With with businesses, eventually that business needs to be able to stand on its own because one day you're going to want to sell that business at some multiple of EBITDA, right? And you can't do that when you're commingling your resources, your personal resources with the business resources. So the business bank account is essential that the business owner will separate their personal banking from their business banking, right? This is going to be critical for running a successful business. And one of the major financial tools that you'll use to accomplish this is a business bank account, right? The business bank account helps to maintain accurate records, prepare your reports, your P&L, your statement of cash flows, etc., make deposit withdrawals, wire transfers, issue checks, and many, many more things that are going to be critical from that business bank account perspective, right? So, whether a business owner decides to open an account at a national, regional, local bank, credit union, community bank, I say select the bank that best meets your needs. And how do you know that they meet your needs? When you walk into that bank, they say, Mr. Johnson. That's when I know a bank is meeting my needs. I have that banker's cell phone number on my cell phone because I can give them a call when I have a need and they will pick up the phone. That's when you know that you are being well served, right? But the choice is yours. While every bank offers various types of financial business products, each serving a specific need, right? Things remain the same. At the end of the day, you are going to need bank credit. Now, we know that, and we've talked about this before, is that banks look at the five C's or the, yeah, pretty much the five C's are what the banks are going to look after, right? In order to give you credit. It's really difficult to get any type of financing from a traditional bank just because they are very conservative in who they loan to. That's a good thing and a bad thing because the good thing is that they can stay in business and you don't have to worry about, run on the banks and FDIC coming in place to help them out. The bad part of it is that as you are standing up your new business, you need access to capital in order to grow that business. You need capital for marketing, right? You need capital to purchase inventory. You need capital to do so many things. Your business should not be on a diet. And when you rely on your personal resources, basically what you have done is you put your business on a diet, right? So, bank credit is the total amount of borrowing capacity a business can obtain from the banking system, right? This is not the same as business credit, which is a much broader category of lenders, such as suppliers, credit card issuers, and leasing companies. Those are the alternative resources that you would go to where many of our clients go to in order to be able to get access to the resources that they need to not only have their business survive, but the name of the game is thrive. You need to be growing your business year over year, or are you really in business? Right. So let's talk about bank credit. A business can secure more business credit quickly as long as it has a minimum of one bank reference and an average daily account balance of at least $10,000 for the past 3 months. One of the services that I like to refer customers to is the business revenue financing. The business revenue financing that we steer our clients towards, you have to have 6 months of bank statements. You need to have a personal credit score of 500 plus and no bankruptcies on your record. But let's continue on with what is bank credit, right? This yields a bank rating, a low five, right? A low five means that you are in the first quartile, right, of the 5-digit range, right? Meaning an average daily balance of $5,000 to $30,000. A lower rating, such as a high four, has a balance of 7,000 to 9,000 won't put a stop to the business application, right? If you have a high 4, but it will slow down the approval process. So let's recycle that. A low 5, right, has means an average daily balance between 5,000 and 30,000. A lower rating, say a high 4, means that you're between 7,000 and $9,999, right? So those are the ratings that you want to look for, because all of this data is being shared with the different credit reporting agencies, right? The bank rating that we wanted to talk about, this is an average minimum balance maintained in the business account over a 3-month period, right? So a balance of $10,000 will rate as a low 5, right? 5,000 rates as a mid 4, and 999 rates as a high 3. So you kind of see high 3 is 999. $500 in your bank account is going to be a mid 3, right? So you want to have an average of a low 5, which is $10,000 in that bank account over a 3-month period. So what is the goal? The main goal should be to maintain a minimum of a low 5 bank rating, $10,000 for at least 3 months. Unfortunately, without at least a low 5 rating, most banks will assume that the business has little ability to repay a loan or a line of credit. Banks are going to be looking at you and whether or not any type of debt that you take on can actually be repaid. They're not into the business of giving people access to capital if you do not have a means of showing how you're going to pay that money back. Does that make sense? I hope that makes sense, right? All right. So again, a high 5 is an account with 70,000 to 99,999. A mid 5 is with 40,000 to 69,999, and a low 5 has a balance between 10,000 and $39,000. A high 4 is between 7,000 and 9,999, whereas a mid 4 is between 4,000 and $6,999, and a low 4 is 1,000 to 3,999. You follow where this is going for the most part, but business owners should do whatever they can to try and keep at least $10,000 in their account over a 90-day period, right? The money should be kept there just to ensure the bank rating is high enough to increase future financing approval. Each cycle is based on the balance rating during the previous 3-month period. So before business decides to apply for credit, it should keep a balance rating of at least a low 5 for the last 3 months. I hope you are following me and understanding why we put all of this together, because if a business doesn't have a solid financial foundation, can that business actually survive and thrive? That's a question that I have asked time and time again. And there's going to always be a resource constraint when it comes to you having the personal resources to put back into your business, right? Unless you are able to print money, it's going to be very difficult for you to continue to fund your business, especially as it grows. So why does bank ratings matter? It is also essential that the business owner ensures that their business accounts are reported exactly the way all their business records are, right? With the exact same physical address, no P.O. box, and no phone number. We talked about that when we talked about setting up your solid business foundation using the fundability platform is, yeah, you cannot use a PO box for your business. That's going to throw up all kinds of red flags saying, are you really legit? Are you really legit? Because there is no Fair Consumer Reporting Act on the commercial side of the ledger. It just doesn't exist, right? So the banks have to have more due diligence, right, to before they are going to loan you capital. So it's vitally important that every credit agency and credit vendor, every record keeper, financial records, income tax, websites, email addresses, directory assistant, also lists the business name and address the same way, right? Everything has to be, if you spelled it out street when you filed your entity, it needs to be spelled out street with the business, with the bank, as well as with the IRS, right? No lender is going to stop to consider all the ways your business might be listed when they look into the business's credit worthiness, which we like to call as fundability. If they can't find what they need easily, they will just simply deny the application, right? If you aren't showing up in your tuxedo with your Sunday best, why should it matter to them? They're going to move on to the next application and not worry about you, right? And because there is no legislation in this space, they don't have to tell you why they denied you. You're left to figure it all out on your own. That's why here at VIP Business Credit, we say, let's work with us so that we know what your business credit report looks like before you ever apply. But when you do apply, why don't you apply with a financing source where we know what their success criteria is? And when we submit that application to that financing source, we know the probability is going to be high that you will get approved because we know what their success criteria is, right? So let's finish on with bank ratings. It is also essential that a business manage its bank account responsibly, right? This means that the business should avoid writing non-sufficient fund checks at all costs because it destroys your bank rating. Non-sufficient fund checks are something that no business can let happen. Avoid it like it is the plague. It's even a good idea for the business to avoid overdraft protection to the bank account as soon as possible to avoid NSFs. So if you have to, apply for overdraft protection and eliminate this problem from ever happening, right? Business revenue financing is one of the products that I told you about that I actually really love because the success criteria is laid out. The payment terms are also laid out. Everything is understood, right? But definitely you can get better terms when you have a PAYDEX score and IntelliScore that is 80 or above, right? So it's very important that a business show positive cash flow, right? Typically, they want to see at least 5 transactions coming into the bank account per month. The cash coming in and out of a company's bank account should reflect a positive cash flow. Positive cash flow is the amount of revenue left over after the company has paid all of its expenses, right? One of the things that we do as business owners is sometimes at the end of the year, we want to show losses, right? That's going to make it very difficult when you're showing losses on your taxes, but you're applying for credit from a bank. They're going to be like, this business is actually losing money. So when the account shows a positive cash flow, this indicates that the business is generating more revenue than it is used to run the company. As I like to say, cash flow is king. However, what is a king without a queen? The queen, when it comes to operating a business, is credit, right? So If cash flow is king, then that means that credit is queen, right? Back to bank ratings. It's important to also recognize that banks are motivated to lend a business that has consistent deposit. A business owner must also make regular deposits to maintain a positive bank rating. It's vital that a business owner make a lot of consistent deposits more than the withdrawals that they're making in order to have a good bank rating. All of this is going to be put into the ledger, right, that you have in that profile when they're going to be going to the investment committee to see if they can get you approved. So, what is bank credit? We talked about bank ratings, right? High fives, mid fives, low fives. But now let's talk about bank credit. Bank credit is not only used on monthly deposits, bank rating, and check history, but also includes the age of the account, the bank products that the business uses, and any savings account or investments the business has, right? So let's talk about the first one, the age of the bank account. A seasoned bank account shows stability and longevity in the eyes of lenders. Keeping a healthy and long standing relationship with the bank is also crucial for all companies. A good, stable relationship with the bank that reflects longevity will be highly appreciated by lenders considering lending your business any kind of money, right? Any kind of money. So, what type of products can you use at the bank in order to enhance and grow the relationship? Your bank rating will be higher the more bank programs you use and maintain and pay as agreed. Paydex is just a window of how quickly you pay your bills. Having investments and saving accounts helps your bank rating. Having open loans, even open CDs, helps with your bank rating. Plus, if you are at a bank and you have money in an account, maybe you want to think about putting it into a money market account or even a certificate of deposit. Maybe you could do like a tips that's actually rolling over when they expire just because you want that liquidity, right? 3 month liquidity or something like that, but you don't want to be locked into that instrument for several years on end. That is something that you actually can use in order to be earning the most amount of interest on that money. However, you have the liquidity that you need because you should be able to run your business for a 3 month clip. So other products that you can use at the bank ratings are higher the more bank investments and savings accounts that you have. Having higher balances in those accounts helps your bank rating. Making regular deposits into these accounts also helps your rating, right? So it's not just the amount of money that you have in there. At the same time, it's really a conversation of how you're actually using that account and being a steward for that money. Beyond just the bank rating, a business bank should also act as a trusted advisor that can assist in growing your business, right? It helps a business to consider working with a financial institution that specializes in providing banking services that are tailored to your specific industry. The more services the bank offers that the business can take advantage, the higher the bank rating will be, right? And in my BNI chapter, Vicky is always there. She always has so many things to say, good things about her bank. So, bank ratings, working with a lender that already understands their business makes it much easier to get a loan approved compared with other lenders. This is because the majority of lenders have difficulty accessing the credit risk of small businesses and some industries they do not know about. That's why your NIAX code is going to be very critical when before you are applying, because there are certain industries where they will never loan on, such as gambling, etc. But then there are also other industries that require a higher level of underwriting just because you use the incorrect NIAX code. If it is your correct NIAX code, and like you're in the hair salon business, right? They're going to underwrite your business just a little more strictly because of the NIAX code. So one of the things that you can look at to make sure that you aren't, unwittingly hurting yourself is to check in with your NIAX code to make sure that you have the proper NIAX code that's being recorded on your tax return. If you do have an incorrect NIAX code, you can change that, or when you're doing your taxes, you can have your accountant make that change on your behalf, right? We're going to probably start to wind this down at the same time, right? Bank ratings, while profit and loss statements, tax returns, business credit, and personal credit checks are common requirements in the lending process. It is much easier for a lender to underwrite the business financial risk when it truly understands and specializes in making loans to a company in an industry that they are familiar with. But also, this is one of the reasons why I had mentioned to you why I like banking with a community bank, because you get to build up that relationship. You build up a relationship with a vice president, right? And that vice president is the one who's going to go into the investment committee, and they could actually talk on your behalf. If you're calling an 800 number at your bank, I don't believe, unless you have, maybe at this point with any national bank, you have billions of dollars in there, that's the only time that they're going to give you that special attention. So let's wind this down. How to build out an exceptional bank rating. Having a good bank rating is essential for securing banking finances. Ensure you keep a bank balance average over 3 months as high as you can, preferably at 10,000, so that you are in the fives, right? A low five is at 10,000. Ensure your account doesn't go negative, and you never ever incur non-sufficient fund charges, as they will destroy your bank rating. You don't want to have that happen and that negative report be there, right? In order to enhance the relationship that you have with your banking institution, take advantage of and use other services that the bank offers, such as CDs, saving accounts, and other investment accounts. Open your bank account when your corporation starts. Remember, we talked about step two being, well, step three is getting your EIN number, which is step number two. Step number three is going down to a bank and opening up that business bank account, and leave it open, as this longevity will help your bank rating. Make consistent deposits on a regular basis. I would think that you would want to have 3 to 5 transactions a month at minimum, and ensure each month you have good cash flow through your account by regularly putting money into the account, and especially putting more money into the account than what you are actually taking out. Definitely. You got to have a positive cash flow on the account. Taking these steps will ensure you have an exceptional bank rating. And an exceptional bank rating means your business will have a great chance of being approved for bank financing, including loans, credit lines, and credit cards. That's when you are working on tier four of the scale. So there are 4 levels to all of this. You start out with tier one, where you're doing vendor accounts, you're moving over to store credit, and then you're moving up to universal cards. And actually, at tier four is where people will give you loans and lines of credit. I hope that all made sense, but something that well, not recently, it's been about 6 months to a year that I came across bank ratings, and we do everything that we can possibly to make sure that we have at least a minimum of a low fives inside of our bank account, because we definitely are leveraging different financial products in order to, one, maintain our business through the amount of operational capital that we need for marketing and things of that sort. But also, when we are going to do an acquisition, You know, we love real estate. We are addicted to real estate in all ways, right? This is something that I stress upon. If you are an investor, you should be saying to yourself, not really, where do I find my next deal? You should be saying, how can I set up a proper business so that in 3 to 5 years, work becomes an option for me? If there's anything I ever want you to get from all of these conversations that we're having, is that there's a lot that you can be doing with your time rather than spending 40 hours defined by someone else. You get to control your time when you have achieved financial freedom. And that's the goal that we always have set up. So that's the lesson for this week. Next week, I have a guest who I've invited to come on. She's going to talk about bookkeeping. Bookkeeping is something that we overlook quite often, but it's something that is very critical to our business, especially if we're going to be looking for access to capital for whatever our needs are, either uh, lines of credits or loans. So definitely you're going to want to tune in next week when we talk about all things bookkeeping. And then I've had another conversation with another young lady who is an AI specialist, and she's going to come and talk about some of the things that you can do to incorporate AI into your small business, right? Everyone talks about what's going on with AI, but nobody really comes to the table with solutions. So hopefully she's going to share with you how to do more with AI outside of Chat GPT so that you can put it into your business. So I want to thank you for joining me today, whether or not if you're catching this live or you're catching this on our YouTube channel. But definitely, we have a lot of good things that we're talking about. I thank you for joining us. And for now, I'm out. I will see you next wonderful winning Wednesday. Let me give a little bit of closing out music so that we go off. But I will talk soon.